Pop quiz, hotshot. Someone tells you they want to cancel a contract, wants a refund, and if they don't get it, they're going to sue you. What do you do? What do you do?
I have come here to chew bubblegum and kick ass. And I'm all out of bubblegum.
This is the Virtual Real Estate Investor Podcast with Vincent Polisi. Buckle your seatbelt and prepare to learn how to legally make six figures investing in real estate with no money, no credit check, and nothing but a computer and internet connection. Learn how you too can begin generating buyers and sellers for free today, and why you're only 2 calls away from making a $10,000 or more payday while never leaving the comfort of your home. And now, your host, the virtual real estate investor, Vincent Polisi.
Here we go. As we've discussed before, if you're in business long enough and you're doing enough deals, eventually, unfortunately, the nature of the beast is that somebody is going to complain. Someone is going to be upset. Someone is going to accuse you of things that you didn't do. Someone's going to scream fraud. Somebody is going to threaten to sue you. Somebody's going to sue you. And so you have to make the educated decision as an entrepreneur, understanding those things, to either acknowledge it for what it is and be prepared, or live in fear and go work 9 to 5 jobs for somebody else. So I prefer to be prepared. I've always been prepared, and there are certain ways that you have to deal with things when these things come up. Most people, unfortunately, buckle under pressure. They buckle under threats. They're not used to dealing with them and handling them. And if you're a professional real estate investor, these things are going to happen, and you have to get equipped at how to deal with them and hold deals together, avoid litigation, and keep your business operating smoothly. If you're going to collapse at the first time somebody complains or threatens you or threatens to sue you, this is definitely not the business for you. Now, what you're going to get to hear in this call is exactly what happens when things go wrong and how to handle it. You're going to hear a buyer, a seller, technically an optionor and an assignee, but for all intents and purposes, we're going to call them a buyer and seller so you understand how this transaction is going down. In addition to some friend of the family for the buyer who has, for some unknown reason, gotten involved. You're going to get to hear people making claims that absolutely are not true and have no basis in fact. And you're going to get to hear exactly how I deal with that to hold this deal together. And by the end of the phone call, after all the hostility, you're going to get to hear them thank me for educating them while not ever acquiescing to anything that they said. In other words, I didn't buckle. I didn't provide anybody a refund. We didn't cancel any contracts. Everything stayed on course. You have to be able to do that, to be the ramrod that does that.
Hey, what's up, investors? John Lee Dumas here, founder and host of Entrepreneur on Fire, awarded Best of iTunes 2013, and you're listening to the Virtual Real Estate Investor Podcast with my man, Vincent Polisi. Prepare to ignite.
And now, without further delay, it's unquestionably everyone's favorite segment of the Virtual Real Estate Investor Podcast with Vincent Polisi. It's time for an extra large dose of total transparency. As you listen to Vincent live and in the trenches dodging bullets and grenades, while he's closing real buyers and sellers over the phone.
Hello? Hello? Hello?
Hello?
Brittany. Hey, his direct number went to voicemail and his cell number doesn't work.
Yeah.
Nice.
But did you run it over the 678 number, right?
I don't have a 678 number.
I do. He called me. Let me get it out my contacts real quick. Hold on. I have 3 numbers saved in my phone for that man. 678.
Yeah.
648 1212.
1212. Okay, hold on.
Thanks.
Hi.
Hello? Vincent.
Yeah.
Hey, I got Steve and Brittany on the line. This is Brett, and they had some questions. They wanted to talk about their transaction on their sale of Steve's property.
Okay, I'm sorry. Who is this?
My name is Brett, and I'm a consultant of Brittany's. And Brittany's on the line as well as Steve.
Okay.
And
What type of a consultant are you?
just a personal friend.
Okay. All
Okay.
right. What can I help you with?
Well, Steve and Brittany are somewhat, I guess, not with a clear understanding of this transaction. And Brittany's intent is to buy the property from Steve, and Steve's intent is to sell it. And they would both, at this point in time, like to void the contract that they have with you and have their funds reimbursed.
Yeah, it doesn't work that way, though.
Okay, how would it work?
I beg your pardon. We have executed contracts. That's how it works. That's the purpose of a contract.
Mm-hmm.
The purpose of a contract is so you have an agreement in writing that everyone understands and that they agree to. It's not so that we can do all the work and then put the two parties together and then they can mutually decide to do a deal without us and with us not getting paid. That doesn't make any sense.
Well, Steve has a cancellation clause in his contract, correct?
It's already been, the option has already been exercised, though. Mm-hmm. That's all recorded. We've got the recording of the whole thing. So, Listen, guys, I'm going to tell you something. I'm not here to play any games. I did exactly what I said I was going to do. Steve has the money that he is owed. Brittany has the house that she has owed. If you guys want to go get an attorney, go get an attorney and have them call me.
Well, Vincent, let me ask you a question. You have received your fee. So based on the fact that you have received your fee, can the contracts be voided with you maintaining your fee?
Well, I don't have all the money yet. There's $2,000 that's still owed to me.
Well, you collected $10,000 from Brittany, correct?
Yes, and I forwarded $2,000 to Steve because she didn't have the full amount required by the contract.
So if I give you $2,000, we can be done with all of this.
Yes, that's not me doing anything illegal, fraudulent, unethical, or wrong. That's the deal. That's the agreement.
But me nor Steve are really clear on the agreement.
I can't help that. I don't understand what that means. You said that you executed a contract without reading it. How could you possibly be clear on the deal if you didn't read the contract that you signed? It's like one of your clients at Yellow Pages saying, hey, I didn't realize I was paying for all of this stuff because I didn't read the contract. It's ridiculous.
Well, Vincent, here's my question is, Steve's under the understanding he's selling his house, but he doesn't have a Georgia real estate contract that's executed to sell it.
So
how's he going to sell his house?
I don't understand the question.
Well, are you brokering the deal to sell the house?
I'm not a realtor.
Okay. So then if you could clarify, what is the purpose of the deal then? If Steve thinks he's selling his house, Brittany thinks that she's buying it, but there's no real estate contract.
There is a real estate contract. It's the one that Brittany executed. Well, that gets assigned to Steve as soon as I have the remaining money.
So when you receive the $2,000, then you're out of the deal altogether then? Is that what you're saying?
From a legal perspective, yes, I assign all right, title, and interest and everything over to Steve so that he has the contract and all ownership, and that in the event that Brittany defaults, he has the ability to proceed directly with the dispossessory action.
Okay, then at that point, then Steve would have to execute and put in place a Georgia real estate contract to complete the transaction.
I don't know where this Georgia real estate contract thing is that you're talking about is coming from. Okay, there's no other contract that has to be done at this point. We already have the contract.
So if we take your contract, that title company in Georgia, they'll close the deal with what you have.
Close what deal with what we have?
For Brittany,
what you guys don't understand is hold on, don't talk over me, okay? You don't understand mortgage banking, all right? Here's what's going on. Let me explain it to you so it makes sense. I spent 12 years in mortgage banking and owned a mortgage company, and I can tell you exactly what it is that's happening, okay? Brittany is now going in for a purchase money mortgage on a property that she technically, legally already owns. You cannot do a purchase money mortgage on a property that you already own, that you have equitable interest in. You can only do a rate and term refinance transaction on that property, okay? Steve has the deed as a security interest in the home so that he doesn't have to take her through the judicial foreclosure process and then evict her in the event that she defaults. So the issue here at this point in time is that she doesn't qualify for a loan amount sufficient to cover the purchase price, as I understand it, from what she told me earlier today, and it's the credit of the down payment funds that she already has. Now look, let's back this thing up to its most elemental foundation so that we can all get on the same page, because I don't appreciate the character attacks and the casting aspersions on what we're doing and the insinuations of fraud and all this other stuff, okay? We're not going to go there with this. The deal was this. Brittany gets the house. She buys it. She's the legal owner of that property right now from the IRS's perspective, which is exactly what was promised. She can take the tax deduction, which she desperately needs right now. The whole confusion in this whole thing is that Brittany, before even completing this transaction, has decided to go and try to do another transaction only to find out that for whatever reason, based on her income, she doesn't qualify for the full amount necessary to purchase the property. Okay? If she did and there were equity in the home based on the appraised value and the acquisition price that she has, she wouldn't have any issues. But that's not the case for whatever reason.
$2,000 paper trail paid to the title owner, like I told you earlier.
Yes, I understand that. But again, you already own the home now for every perspective that makes any difference.
But that's not Steve's perspective. He owns this home.
So, just so I understand that, so in this transaction, Steve, in essence, is carrying the note?
So, yes, as I explained to everybody, Brittany moves from buyer to borrower. Steve moves from seller to lender, and those are the effective titles of everybody upon completion.
Mm-hmm. And no other, and there's no other lien on the home. There's no other financing currently on the home through. Steve currently owns the home free and clear.
I didn't say that. He doesn't. He has a mortgage. That's what has to be paid off.
Ooh. Okay, and then in the interim, the $2,000 a month interest goes to Steve for carrying the note.
Correct.
So Brittany needs to pay that directly to Steve, and when you're paid the $2,000, you're completely out of the picture?
Once the assignment takes place, sure. From a legal perspective, I mean, it doesn't mean I'm going to leave everybody hanging, just as I haven't left her hanging with the air conditioner issue or anything else that's happened. Uh-huh. That's not the way we do business. Okay. If this was some kind of a scam or a fraud, I wouldn't be on the phone with you right now, would I?
Yeah, I'm not saying it is. I'm just saying they don't understand. Neither had a clear understanding of the transaction. And granted, yeah, they signed. You know, if they signed, that's one thing. Having an understanding, you know, is another thing.
Well, understand something, and I appreciate what you're saying. And if that's the case, I'm happy as I can be to clarify everything for everyone to their ultimate satisfaction. But our PBX records all calls for this exact reason. Mm-hmm. Okay, because I do have recorded phone calls with both of them acknowledging their understanding of what we were doing. What's happened here is we have an issue. It sounds like, and I don't want to point fingers, but it sounds like there is an issue of greed where the $10,000 is involved. That's the only thing you guys are talking about. Other than that, there is no issue, right?
Well, it's an issue of, I thought that $10,000 went directly to Steve. From my understanding of what you told me, that's why there was
let me ask you a question. What difference does that make? What difference does that make in the entire transaction? How did you think I was being paid? Whether it comes out of the front side money or it comes out of the back side money is immaterial.
But you didn't tell me that when I asked you the benefit of someone coming to your company and doing this for you.
Tell you what?
I don't know. I don't know, Steve. I mean, Vincent, I don't know. This is why I have Fred on the phone for me.
Okay.
Well, I have a better understanding.
I didn't tell you what. What is it that you're saying that I didn't communicate to you?
I don't know.
Brittany, I had hours and hours of recorded phone conversations with you.
I didn't understand the fact that the $2,000 wasn't going towards the $285.
It is going towards the total price. If you read the contract, it's a credit.
Yeah, it's for the sales price is $495. The sales price is $495 less than 10, $295 less than 10, and
right.
Steve's $285. I mean, now that you've explained to Vincent, I have a better understanding of it, and I guess it's I think I'm right in saying, I mean, this is not a common everyday transaction that people go through. I mean, this is kind of not unique. I mean, I'm sure you do a lot of these, but it's not a standard real estate transaction that 95% of the people go through and buying a house.
Until the last 7 years when they imploded the mortgage industry and people can't qualify for mortgage financing, I would agree with you that it's not the vanilla, that it's probably 3% of the transactions that are out there. I agree with that.
Okay, so there's understanding, and you get your $2,000, and then you move out of the deal. Brittany gets a loan, and as soon as she pays Steve $2,000 a month up until the time that the loan closes, and then Steve's paid off by her loan or by her mortgage, and then Brittany makes her mortgage payments, and everybody's down the road.
Yeah, that's exactly right. Yeah, listen. Let me explain this. The only monkey, or the monkey wrench here that we have, is the fact that she hasn't completed the transaction that she's currently in yet, and she's going off half-cocked to Bank of America, trying to then do another deal, and nothing has been properly explained to Bank of America on exactly what's happened. And because of what you said, they don't have an understanding, and because they don't have an understanding because it's not a vanilla deal that they see every single day, you deal with single-cylinder brains that can't process anything outside of the little boxes that they're used to filling out, and that's why we have to get involved and explain it to them, okay? It's the exact same thing to deal with when we're doing stuff like we just closed. Well, actually, matter of fact, Brittany can tell you this. Well, the same thing we had to go through with her with the 401k. Most of the time they don't understand what the scenario is and what the legalities of what we're doing are, but I have to get involved and explain to everybody, here's the law, here's how it works, here's how she does, X, Y, and Z, so that everybody's on the same page. So the challenge she's got with Bank of America is that they don't understand how the deal is put together. She's got more than likely, based on the underwriting guidelines, she's got a seasoning issue as far as the funds are concerned, because there's no sourcing and seasoning of funds. And I got bad news for you. They're not going to let her use the money from the credit card for the down payment,
right? Regardless, right?
Okay. I mean, and I would have never let her do that if I had known that she was going to turn back around immediately and try to go right back to them for whatever it is she's doing the mortgage side, because I could have told her right out of the gate that was the whole purpose. Typically, these deals will close sometime between 6 and 12 months after somebody's in a property, and at that point, if she'd had used the credit card, the two things would happen. There would be seasoning of the funds, because they require 60-day seasoning on all funds, okay? The other thing is that if, more than likely from what she said, the credit card would have been paid off, so there would be no associated debt for her debt-to-income ratio on that credit card. Okay, the Bank of America will be able to say, okay, this is where she used it, she paid it back, we have 60-day seasoning, we know where the funds came from, you have the chain of title, and you're in good shape, the paper trail. But what's happened here is she's not even done with this thing yet, and the first thing she does, I'm not saying she's doing anything wrong or whatever, but that's where the crux of the problem is.
So when she goes to her bank to get a mortgage, what kind of mortgage did you say she needed to request?
Well, because of where she's at right now, I don't even know if it's going to make a difference because of the down payment money and where she got it from, because that was never the original discussion that we had, so you guys understand, okay? It was never, nobody ever told her, go get a credit card, charge it up for a down payment. Okay, that's not a conversation that anybody
You
ever
told
had.
me
That
that if I
came in
didn't
at the
secure the
11th hour.
money, but then Vincent, you told me that I had to get the $10,000 by Friday, or I wasn't going to have the house.
Yeah, that's because Steve had another renter. I mean, Steve, were you on the phone?
I'm here, yes.
Okay, so Steve had another renter lined up for Monday. The purpose of this deal with you, as I told you Sunday, was that if we don't get something locked up and we get funds in hand where I can tell him that we have an executed contract and good funds in hand, then he's going to sell the property, or not sell it, but rent the property to these other renters, and we wouldn't even be having this conversation. So that was the purpose of all the hours and hours and hours I've spent with you on 401k calls and all these other issues and air conditioners and all this other stuff, was to, number one, secure the property for you so that you didn't lose it to the renters, okay? And then to put you in a position where you own the home and could immediately take the tax deduction, because that's where you're at now. Now you have a $2,000 a month tax deduction that you desperately need.
Vincent, you had said when I was just asking about the mortgage, what type of contract is it that she needs to tell the mortgage company she has? It's not a standard real estate contract. You call it something else.
I don't know what you're referring to. I mean, you can download the GAR, the Georgia.
The contract to buy the house, the contract she has, she can take that to the mortgage company, right, and say, I'm purchasing this home, I want to get a mortgage. But really, you're saying it's a refinance.
Well, yeah, what's going to happen now, because she's like, day one into doing this, is it's going to be convoluted, because she just, they're going to have seasoning requirements on all of this stuff, and they're not going to credit her for the down payment. Or not let me rephrase that. They're not going to credit her for all of the.
They told me they would credit me that if I had a $10,000 receipt from the homeowner, from me to the homeowner, as well as the gift money written up from my parents.
Right, but you didn't tell them that it came from a credit card.
No, they knew. They called me when I got that credit card and told them why I wanted it. They called me last week and wanted me to come into the bank. I didn't call them for the mortgage.
Okay.
Hey Vincent, so let's say that, so she's paying Steve $2,000 a month right now for interest. Let's say she can't get the mortgage. Can she just become a renter and pay Steve rent? Or, I mean,
why would she want to?
Let's say she can't get a mortgage. Can Steve?
She already has one.
She has a mortgage with Steve.
Right.
So let's just say, does Steve have the right, if he wants to, can he leave her out of the contract and just let her become just a regular renter?
So I'm not trying to be offensive. I don't understand where we're going with that line of questioning. Why on earth would she want that?
Well, what if she can't go to a bank and get the mortgage now?
So what?
So she can make mortgage payments to Steve, and then Steve has to turn around and make mortgage payments?
Yeah, exactly like he does if he rents the house. Not any different. She's got 24 months to qualify for conventional financing, and based on everything she indicated with her credit and her income, that shouldn't represent any issue. The only issue that she's got right now is how quickly she's trying to do all this stuff. And there's nothing wrong with that. It's what every seller wants, which I'm assuming is why Steve's on the phone right now, because he'd like to get the property sold. That's right. The promise that we make to him. I mean, that's the objective in getting a buyer like Brittany, with the money that she's making, with the credit that she has and all that stuff, into his property so that she can close the refinance or the refinance transaction.
Right.
That's the whole point. It's designed to be a win-win for both parties. In most cases, the buyers don't qualify for conventional financing, and they need some time to get things restored and get straightened out so they can qualify. In most cases, the sellers can't sell, or because they can't compete with the banks on the short sales and the foreclosures without discounting the property to a point that they don't want to discount it to. And so this becomes a Band-Aid, a win-win for both parties. She gets a house that she can own with a tax deduction. He gets somebody in the property where it's a better deal than a rental because he's no longer responsible for maintenance and repairs, so he's got a static income coming in on a monthly basis, plus he's got amortization on his loan if he's got a fully amortized loan, so he's making additional money there, which basically affects it's almost like cash flow. And so it's a phenomenal deal that is being convoluted strictly because of the I guess how quickly she's trying to do the thing with with Bank of America, and that it was kind of done, and I'm not criticizing her or trying to be condescending, but it's kind of done half-cocked. It's like the purpose was, and we were supposed to be on the phone together with them, and I guess somehow I didn't see her call come over, and I bungled that, so I'll take responsibility for that one. But beyond that, I mean, you don't have to go through Bank of America. You can go through anybody.
Right.
Doesn't matter. So long story short is this. Here's what has to happen, because I assume that everybody wants to proceed with something. We need to get me on the phone with an underwriter because I speak their language and I can walk them through the underwriting guidelines and explain the deal and say, okay, now listen, this is what's happened. Tell me how we document it and fix it so that it will pass through your underwriting. Okay? And that's all that has to happen. And then once that happens, they'll give us, a list, and then she can, I don't know if she's made application yet or not, or if I don't know what she's done at this point, but they're gonna have to see. Have they got your tax returns and all that, Brittany? Did they get all that stuff from your paycheck stubs and everything yet, or are you still working on that?
No, they told me they cannot accept my application due to you not signing that other contract and due to you not being the title owner.
Get back up for a second. Making an application for a mortgage is not predicated on any contract that you have executed. You simply make an application. You can do that right now online. Okay? It has nothing to do with any contract.
But she told me the underwriter is not going to accept anything she sends in for me until the contract is written between me and the homeowner. And then the contract that me and you have, you didn't even sign the other side. So when I printed it out and gave it to them, they told me that it was not void. There was not a contract.
Yeah, it's yes. Let me explain to you why that is. That was done for Steve's protection in the event that you moved into his house and didn't pay all the money, and we had to get you out because you weren't paying what you were supposed to be paying up until the point in time that all the funds are in and you've done what you're supposed to do. Okay? That's why. Because lockbox code, you started moving stuff in day one when you'd only paid, $1,500. And if that was a scenario where you didn't follow through and do what you said that you were going to do, we had to have a remedy to be able to explain to a sheriff that you were trespassing and to have you, removed from the house.
Okay, but I got you the $10,000 by Friday. I mean, I did everything to get you that money.
I understand.
So also now, Brittany's responsible for paying the taxes, and she needs to have a homeowner's policy enforced.
Yes.
So
what happens is, hold on, let me finish. What happens at that point is this: once she has a homeowner's policy in place, it has to be set up with Steve as the mortgagee and the additional insured. Okay, he has to be on both of theirs on the declarations page. And then Steve can drop his structural policy, and then he can reduce her $2,000 payment by the amount that he is currently paying for his structural policy, and he still nets the exact same amount of money.
Uh-huh.
Does that make sense?
Yeah. What about the taxes?
What about them?
Well, so Brittany pays the taxes too, then, or? I mean, will the taxes be in her name, or?
Okay, let's back up. She's a homeowner. Okay. Whose name the taxes are in at present, that's not going to change until the deed gets conveyed from Steve. Now, if he wants to convey the deed to her, right now he can do that. And have a security interest in it. He can get her to execute a security deed, and he can convey the deed to her. That can all be handled by an attorney right there in Savannah. That can all happen. I wouldn't advise it, but that can happen.
Mm-hmm. Well, until that happens, his taxes would still go to Steve, then, right?
That's between the two of them. It has nothing to do with me.
Well, no, I'm just saying. I'm just saying. From the county's going to send the tax bill to Steve until the deed changes.
Correct.
Right? That's what I
Right.
meant. I mean,
Once the recordation happens, right? But from you have to understand the way her payment is structured. It's property taxes and interest only, and the reason for that is not to harm her. It is to maximize the tax deduction that she can take immediately, because if she follows my advice, she will be able to then immediately increase her net take-home pay based on her tax rate, cash in her pocket every single month. So when we go through the process and I ask somebody, what would you rather have? Would you rather have a fully amortized principal and interest, taxes and insurance payment, okay, where you're going to be lucky to have $100 a month going towards, probably wouldn't even be that much, $100 a month going towards principal that's phantom, it's paper that can be lost and absorbed, or would you rather we do this and you have an extra $500, depending on what her tax rate, I don't know what her tax rate is, but $500, $750 a month in actual cash in your pocket every month, so that it offsets the net effective payment that she's making. So in other words, if she's paying $2,000, and let's say that the net effective benefit of the increase in her take-home pay is, because I don't know what tax bracket she's in, but it's either going to be 25 or 35%. So it's $500 to $750 in real spendable cash that she would then get by adjusting the W-4 and what the IRS calls anticipation of the tax deductibility of the mortgage payment. Okay, so it's a phenomenal deal that she has, and that they both have. I mean, in all honesty, I'm not just saying that because I put it together, but when you understand all the moving parts and why they're put together the way they're put together, the only issue that we have right now is that she wants to get a mortgage, and Steve wants her to get a mortgage, and I mean, we all do. And how do we affect that based on where we're at today? It's like trying to get the milk back in the jar, or the milk back in the carton. So that's what I'm saying is we need to get a hold of, I'm going to get a hold of Bank of America or somebody tomorrow, whoever it is, whatever lender she wants to go through, and let me talk to the underwriter and figure out how to, because we're going to have to put this thing together with baling wire and duct tape.
Okay.
If we're going to do it immediately, because I don't believe, I'm going to tell you right now, I don't believe that they're letting her use the credit card money for the down payment. That is a absolute no-go and has been for decades.
Right. Okay.
And again, let me qualify that. Until and unless it's seasoned for a period of time, and normally they require a minimum of 60 days seasoning.
Okay.
And then she has to qualify based on that other debt.
Okay. All right, Brittany, you got any other questions, Steve? I mean, I have a pretty good understanding, I think, now of that makes sense. I mean, it was just, a matter of talking to you, Vincent.
Well, I appreciate that. Let me explain to you what you guys can do here so it makes sense from a legal perspective, okay? I'm not trying to harm anybody in this, okay? And so everybody understands that. We work like hell on both sides to put this thing together and make it make sense and get her in when she wanted to get in, and get Steve somebody in there that wanted to purchase a property and was going to qualify, and get all the traditional absentee landlord hassles off of him and increase his net on the property itself. So, but once I provided the assignment, you guys are free to do whatever you want. If Steve wants to issue her a mutual, or you guys want to execute a mutual release, a waiver of liability and a hold harmless, and cancel that contract, that's absolutely your prerogative. You absolutely can do that. Okay? And you guys can start fresh and say, hey, listen, let's cancel that whole thing out. We can start anew based on whatever Bank of America, because normally what I would typically do, and this is what I was going to do before all this came up, was as soon as the remaining funds were paid, I was going to put together the agreement directly between the two of them and just 86 the one we have.
Okay.
Okay?
Okay.
Because that way you have, and that's the problem that you're running into, is the process was not allowed to complete. Normally, when somebody comes in and they pay the money, it's all paid at one time. It's not done in these staggered payments.
Right.
And then there's just an agreement that's done directly between buyer and seller, and you have the clean contract that Bank of America is looking for.
Right.
Okay.
Okay. All right.
So once you get your remaining $2,000, then everything you just said can happen.
Yeah.
Okay. And no other legal binders.
Brittany, remember, I'm the guy that's been with you with this thing from the very beginning, okay? I'm not trying to hurt you. If I was trying to hurt you, I would have hung up the phone a long time ago.
Okay.
Does that make sense? If I was trying to hurt you, I wouldn't have talked to you yesterday about air conditioners and gotten you warranty information from Steve. How does that benefit me? It's a waste of my time, okay? It's
well,
good
you get
business
paid
because I wanna take-
$10,000 to do it.
Well, I understand. That's what I'm saying. You're making my point for me. It's good business, okay?
Yeah.
I want to take care of you as a client and make sure that you're getting exactly what you're expecting. And if there's an issue, we want to make it right. Just like I told you, if I have to pay to get the garage door fixed, that's what we'll do.
Hey, Steve, did you have any other questions about the deal?
No, I'm much more educated on it.
Okay. All right, well, I think we're all
Let me
good.
ask you a question. Is
appreciate
everybody happy? Is everybody happy other than the fact that she hasn't closed on a Bank of America mortgage today?
Yeah, I mean, I'm fine. I just, I'm just trying to climb the education wall here and just better understand what's going on. That's what I've been trying to do.
That's fine. If I had known that there was a dilemma, I would have been happy to take any additional time with you to, clarify.
No, I think what has just kind of progressed slowly is just there's just been more questions. We've moved so fast that after I'm like, okay, all right, now what about this and what about? And I think I've just had more questions as time's gone on.
That's fine, and that's what I'm here to help you and walk you through that process. The reason that it seems funky or whatever at this point is just because it was very accelerated because of the renters that you were going to put in there. Obviously, I had a vested interest in trying to make sure that we didn't lose a buyer that had that type of capital to put down. We wanted to put a good deal together and not lose that altogether based on the option agreement that we had. And then, just with her accelerating this thing to try to go, I've never had, and I'll be honest with you, in 6 years of doing this, I've never had anybody go to a bank in the first week trying to get qualified. They normally have been to a bank before they ever come to us and know that they don't qualify, which is why they're coming to us to begin with.
But I told you in Augusta, my loan officer told me I was qualified. And then I go to Bank of America, and they said up to $271,000. Yes, you're qualified. And
I'm going to throw. Go ahead. I'm going to throw another wrench here, and let me just tell you this: them telling you that you're pre-qualified doesn't mean anything. The only time that you're going to be qualified is after you actually close the mortgage, and the deed's been conveyed and Steve's been paid. That's the only time on a real estate mortgage transaction that you're going to know that you're qualified, because deals collapse on the mortgage side every single day because of, a bazillion bugaboos that come up as they're going through and they're underwriting your file. Okay.
Yeah, even when you have perfect credit, I can test. It's anymore trying to get a mortgage. It's a pain in the ass.
Oh,
it is.
Yeah. Well, let me tell you this. I had a doctor come to me. He had an 830 credit score, $270,000. I'm sorry, wasn't it? It was $300,000 in cash. 830 credit score. He was trying to buy a property in Ponte Vedra, and Wells Fargo turned him down for a mortgage because even with perfect credit, with enough cash to pay for the house, plenty of reserves, the whole 9 yards, he didn't qualify because he had just sold his practice of 27 years and had decided to buy, I think it was a Subway franchise or something in Ponte Vedra, and he didn't have, a 24-month history of income from the new venture on tax returns.
Mm-hmm.
So he's got perfect credit and plenty of cash, but he still can't get a mortgage. So, right now that's about, the estimates are that about 90% of the U.S. population does not qualify for conventional financing based on what they've done since 2008.
Yeah.
All right, and let me help you guys out here because and I'm not trying to be ugly, but you don't understand lending, and that's not a slight on you, but unless you've been in the business, it's difficult. It's not a $271,000 purchase price, okay? That's not what Bank of America told you. Bank of America told you a $271,000 loan amount, which means that when you factor in the 3.5% down payment, which is going to run roughly right around $10,000, that puts your purchase price up to roughly $281,000 or so, ballpark, to get the $271,000 net loan. So I don't know if that makes sense, but those are the actual numbers, not a purchase price of $271. It would be a purchase price of probably, and they'll have to back into it based on the percentages, but the purchase price would be like $281 with the $10,000 down payment or 3.5% of whatever the number is they come up with, netting out to a max loan amount of $271. Okay, does that make sense? Because I mean that's the way that's going to work out. It's not has nothing to do with the $271 purchase price.
Yes, I understand that based on the things that I heard at the bank today.
Okay. So the next steps, I guess, is Vincent, when Brittany goes to the underwriter, you'll talk to the underwriter and help her get through that process so that they understand exactly what's going on and what she needs to do.
Absolutely, and I'll walk her through the whole thing and explain to them, and we'll figure out how to connect the dots in a way that they're happy.
Yeah.
And understand something, and don't take what I'm saying the wrong way. Even if we do all that, there's still no guarantee until you guys are at the closing table. Right. Yeah, that she's going to be qualified. And I'm not saying that to be negative. I'm just telling you the way these things work. I mean, they're scrutinizing mortgages, like, you know, even with the FHA insurance, the MIP and all that.
Yeah.
Listen, Brittany, let me ask you a stupid question, okay? Because to make sure you're not going to shoot yourself in the foot here. What did they tell you your payment with? Because they're going to give you an FHA loan is what they're going to do. With MIP, with taxes, with insurance, with all that stuff, what did they tell you your payment was going to be?
$1,800 a month.
And what was the rate?
0.69.
4.69?
Oh.
I heard 0.69, but I could be wrong.
I'm sorry, I can't hear you.
I said I heard 0.69, but I could have heard wrong. That's why I called you 20 times so you could hear what I was hearing.
No, the rate would have to be somewhere in the fours, based on where current mortgage rates are at.
I almost understood.
That's all right. Not a problem. I can find all that stuff out tomorrow, because, and you got to watch what you're being told just to make sure, because on a FHA loan, if that's what you're applying for, there's, in addition to the principal and interest, there's an MIP payment, which stands for mortgage insurance premium, that they're going to whack you with.
Yeah.
In addition
and
to
that's why she told me. That's why she told me if I pay them the $6,400 back, okay, that they will qualify me for a conventional loan, which I plan to do with my next bonus check on August 9th. So,
gotcha.
She told me that she would rather see me in a conventional loan than in a FHA loan too as well. She told me she'd rather see me in a conventional loan.
Yeah, I would too. I mean, the problem with the conventional loans, they require, 5% down.
And that's why she said if I can have a paper trail where that $10,000 was paid down and whatever monies my parents want to give me as a gift, that they would accept that.
Okay.
So the problem is I don't have a legitimate contract in their eyes from Steve, and then I don't have a paper trail from where the money went from me to Steve.
Well, that's fine. We can fix the paper contract between the two of you easy enough, as I already indicated. And then we've got to find out from them, based on what we've done, what specifically we can do to fix the document trail to their satisfaction.
Okay.
Okay.
Okay. So everybody's more clear now. Thank you for this call.
Oh, my pleasure.
Thanks, Vincent. Though I'm not really involved, it was a good learning experience for me as well.
Well,
yeah.
I appreciate you saying that. I'm sorry if I'm a little prickly. I just had it was something Steve is not aware of here. Is we're running through an issue here with a PayPal account that they locked down, and I've got about $4,000 sitting in it from people that have paid me, and they've just locked us out of the account. So I'm having to fight and battle to get that thing straightened out. So if I seem a little hostile, that's what I've been dealing with here for the last 2 days. So forgive me.
Okay. All right, everybody. Well, it's been good talking to you all, and have a great night.
Too.
Okay.
Oh, hey, it's my pleasure. And I'll be.
You've been listening to the Virtual Real Estate Investor Podcast with Vincent Polisi. If you've enjoyed this podcast, be sure to connect with Vincent at virtualrealestateinvestor.org, Facebook at facebook.com/virtual real estate investor, or at Vincent's private Facebook group at facebook.com/groups/virtual real estate investor.